Welcome back to MB Capital Strategies. Today we continue with a European energy company. We have a solid balance sheet, strong upstream cash flow, and an attractive combination of cash dividends and buybacks. And that company is Repsol. In episode 5 of the Upstream series, we take a sober look at how strong is the upstream cash flow really, why the cash dividend is around 6%, how buybacks push the total return up to 8 to 10%, and why Repsol itself expects a dividend of over €1 for 2026. And as always, we'll look at this without any marketing spin and without hype. Just cash flow, dividends, and valuation. Repsol is an integrated energy company from Spain. It consists of exactly 3 business segments: upstream, meaning oil and gas; downstream, which includes refineries and marketing; and low carbon, which covers renewable and synthetic fuels. For us, the key area is upstream. This is where the cash flow engine is. Downstream stabilizes the weaker oil phases. Repsol is neither a pure oil play nor a green hype company. It is a cash flow hybrid. Let's also take a look here at how I am invested. I hold a total of 34 shares, with each share purchased at €11.51. Currently, there is a price gain of 40% and a net dividend of €36.94, which I have already received. The 52-week high and low range between 9 and €17. Currently, we are trading at €16.42. Analysts set a fair target here of €16.70. And Investing Pro sets a target of €20.85. If you also want to use Investing Pro for your fundamental analysis, you can get a 15% discount through my link. You can find the link in the video description. Repsol's upstream assets are mainly located in the USA, Brazil, and also in North Africa. Important, here we have low production costs, good project quality, and strong cash conversion. Even with oil prices around $60 to $70, the upstream business remains profitable. And that's crucial because it's exactly this cash flow that finances dividends, share buybacks, and also debt reduction. 2024 in brief, we had revenue of around €51 billion. We had EBITDA of around €15 billion and an operating cash flow of over €13 billion. Despite high investments, free cash flow remains positive. This shows that Repsol is not a balance sheet gambler or a growth at any cost player, but rather a cash flow worker. Now, the most important point for us, the dividend. It's important to clarify or distinguish. The cash dividend is currently around 5 to 6%. The total return, including buybacks, amounts to between 8 and 10%. Repsol has a stable cash dividend plus active share buybacks. This means that part of the return doesn't come as cash into your account, but rather through fewer shares, higher EPS, and an increased stake in the company. And that is capital disciplined and very efficient in the long term. Now let's take a look ahead to the year 2026. And now the following scenario is important. Repsol itself is communicating a dividend of over €1 gross for 2026. This is not an analyst estimate, this is company guidance, meaning their own expectation. At current prices, this means a cash dividend still of 6% plus buybacks for a total shareholder yield heading towards 8 to 10%. And that's with an improved balance sheet, stable cash flow, and no aggressive leverage. This clearly reinforces the investment thesis. Now let's move on to the balance sheet. Since 2022, Repsol has massively reduced its debt, significantly lowered net debt, and built up financial flexibility. Today, Repsol can pay dividends, buy back shares, and invest at the same time without balance sheet stress and without refinancing pressure. And this clearly sets Repsol apart from previous cycles. Oil and gas prices remain cyclical, political interventions in Spain are possible, and energy transition investments temporarily reduce returns. But it's important to put this in perspective. We have no balance sheet risk, no high risk upstream, and no refinancing problem. so the risk is cyclical, not structural. Repsol is a strong upstream cash flow generator, offering a cash dividend of 6% and buybacks bringing the total return to around 8 to 10%. So through the buybacks, we get back about 8 to 10% for ourselves. We have clear dividend guidance for 2026 with over €1 gross. But this is not a buy and forget stock. We still have a political risk, and of course the stock is cyclical. For dividend and cash flow investors, Repsol is very attractive if you accept the cyclicality. Now my question to you, would you buy this stock or would you rather park your money elsewhere? Feel free to let me know and leave me a comment. If you enjoyed the video, I would appreciate a like here. If you are not yet a subscriber and don't want to miss any more episodes, I would really appreciate a subscription here. Otherwise, as always, this video is not investment advice, but simply my personal strategy. I wish you all successful investing. See you in the next video.